Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we have Gregor Gregersen, who's the founder of Silver Bullion, and we're here at Jacksonville, at Jekyll Island, at the Palisade Conference. How are you today, Gregor?
Very good, thank you.
Let's begin by talking about the adoption rate for electric vehicles. Year on year, it seems to be increasing. So what are your views on electric vehicles at the moment?
Well, I think at this point, it's a trend which is going to continue. I don't think it can be stopped. I think that for the audience in the United States, you mostly have a story which is Tesla-based. But if you look at the numbers, you'll find that China is really dominating the space now. We have more than 3 times more cars being sold in China than in the US. And that's despite Tesla selling a lot more cars nowadays, and you start seeing more and more of them in the US. So as the cost of batteries keeps on becoming lower, and especially as we're going towards the 811 chemistry, which will again make batteries cheaper and more powerful, I think we'll be reaching probably by 2020, 2021, that point when electric cars are going to be cheaper than combustion cars. And at this point, everything will just be battery constrained. It's easy to make an electric car, but it's difficult to use a battery. And also that battery production is happening in China for the most part, in Japan, Korea to some degrees. That's where a lot of these are coming. And I think in the Western world, in Europe and in the US, we are now trying to slowly play catch up. But I think if anything, we have to really try and play a role here, because China is eating our lunch, and there's no stopping electric vehicles at this point.
You mentioned the 811 battery chemistry, and the 8 part is nickel. Are we heading towards a more sustained period of where nickel is going to be needed more and more in the future? And will there be a supply crunch coming for the nickel market?
Yes, so nickel is what actually holds the charge. So right now we are using 622 or so, meaning 60% nickel, 20% cobalt, 20% manganese in the most popular chemistry. And we're going towards the 811, which is 80% nickel, 10% manganese, 10% cobalt. As we're going to that, we're going to have more power, more battery, and so we're going to use more and more nickel. So not only do we need to use a lot more nickel as we have more electric cars to build, but the percentage of the amount of nickel needed for each battery is also increasing. And so it's an important thing for people to know is nickel is, you cannot use any kind of nickel. You need to use what's called class 1 nickel, which is a high purity nickel. About 45% of the nickel out there is class 1, which means of the 2.1 million tons which is produced each year, you have maybe 800 to 900,000 tons, which is battery grade nickel. And oftentimes you hear people talk about cobalt and how cobalt is a shortage, but as we're moving to these new chemistries which are using less cobalt, and you're looking at an 8-to-1 ratio, an interesting fact comes up, which is cobalt, we are mining about 110,000 tons. Now if you take 110,000 tons, you multiply times 8, which is what you need to make these batteries, you will find that you need about 880,000 tons of nickel. And that's all the class 1 nickels that's available today. So I could argue that in the future, nickel might be just as scarce in some ways as cobalt might be. And I think a lot of people have not realized that. And a lot of people do not realize that nickel is really one of the most important metals in these batteries. So to come back to your question, yes, we definitely are going to have supply constraints. We are not feeling it so much at this point because the amount of nickel used in the batteries is not that much yet. But in the next 3 to 4 years, I think we're definitely going to get to the point where there's going to be constraints in nickel. And what I really like about nickel is in 2007, it was the high was around $55,000 per ton. Right now, it's down to $12,000. So we're looking at a metal which is 20% of its all-time high, and there's not much you can go wrong. I mean, mining nickel, a lot of mines cannot even produce it at 12,000 tons. So it can't really go down much, but you have so much upside on it, and it's a you get also that electric vehicle optionality basically for free. So I'm a big fan of nickel. I think it's the risk reward is huge with this metal.
Okay. Let's move on to the gold and silver markets. I want to get your opinion on the current consolidation within the space regarding the price of gold and silver. And also, I understand you're working on a new project to do peer-to-peer lending in the gold space. Can you talk a bit about that?
Yes. So about gold and silver, essentially it's quite a quiet period into the gold market and the silver market. I think a lot has to do with the fact that there hasn't been much price movement. Gold has been around 1,300, going up and down from that level. Silver is around $14, $15. There's not a lot of excitement, so there's not a lot of activity happening right now. So it's a bit slow. But having said that, gold and silver physical bullion ultimately is an insurance against a crisis, against uncertainty. And I think that we are well overdue for a recession. I think we are well overdue for a potential meltdown of the financial system like you had in 2008, because you look at the amount of debt in the system, you look at about leverage in the system. The New York Stock Exchange has about 500 billion in margin levels. Ahead of 2008, it was less than 300 billion. So I think it's a good time to buy some gold and silver and just kind of keep it and see it as an insurance when things go bad. Because when things go bad, you will be, very happy to have some physical bullion. It's sort of like last resort. It's very cheap insurance. As a matter of fact, you'll gain something from it over time. So that's pretty much my thought on physical metal. When it comes to the P2P you mentioned, so we are quite excited in that we've been running the peer-to-peer system in our vault for the last 3 years. We had about 3,400 loans. Essentially, with the system, one customer can lend money to another customer using the gold that the customer has as collateral. The interest rates are set by the lender and borrowers themselves on a bid and ask system. And it's very conservative, so you have to have 200% worth of collateral. If the value of gold were to fall to 110%, we liquidate the gold to make sure the lender gets the principal and interest back. So it's very safe, and because it's so safe, lenders are willing to take pretty low interest rates. We're talking 2.5%, 3.5% typically. And our problem is we have too many lenders and we don't have enough borrowers. So I've been working for the last year on a way to create a scanner and tamper evident RFIDs and work with other vaults, commercial vaults out there, to expand the system, to have the vault operators essentially tag the items that might be collateralized, get the information about the collateral, make sure it's going to be locked for the P2P loan, and then be able to basically have people who might be storing bullion in Switzerland or in New York or wherever be able to make use of our peer-to-peer lending system and get a low interest loan. So it's a sort of digitalization of the gold, and it's also a system which will be very, very transparent. We are using blockchain to basically guarantee immutability of the data. It's going to be quite public, and information is all public, and it's a system which we're calling GramChain, and I'll be presenting it in June actually at the Asia Pacific Precious Metal Conference, and everything goes to plan. By end of the year, we'll be able to roll it out full steam. So it should be a good option for people who own bullion, because we'll be able to get cheap loans essentially.
We're both here at the conference in Jekyll Island, and you gave a keynote speech yesterday. So can you give us a brief overview about what you talked about?
Yeah, so the speech, Colin was asking me to talk about scandals and shortcomings in the storage industry. So as you know, we've been in the vaulting. We started our company 10 years ago. We've been in the vaulting business directly for about 8 to 9 years, and throughout this time, we sort of saw how some things could be done better in the industry at large, And especially we feel that a lot of people don't really get to understand or be aware of the differences between owning physical metal and being owed metal. So the question becomes, are you the owner of it or are you an unsecured creditor? And many people think they own something when in reality they're just an unsecured creditor. And if you have a financial crisis coming and if financial institutions start potentially going bankrupt or having bail-ins, then you might stand to lose that bullion because you never owned it. It's when you buy a house, it's in your name. You're not going to lose that. But if you're going to put money in a bank, the bank is owing it to you. If the bank goes bankrupt, you have nothing. So with gold, it can go either way. You can own it. You can put it in your own safes, and really it's yours. It's that saying, if you can't touch it, you don't own it. Or you can give it to an institution who might then either store it specifically for you with a unique serial number and sell it to you with an invoice so that it becomes your private property, and the person storing it, the entity storing it for you, acts as an agent to insure it, to provide liquidity, and to basically keep it safe. But with such a setup, if that entity were to go bankrupt, nobody can touch your bullion. On the other hand, if you're an unsecured creditor, if that entity goes bankrupt, you're going to lose that. And I think even if you look at ETFs, which a lot of people invest in, these are almost always IOU systems. And they might be fully allocated, yes, but these ETFs might be part of a larger bank. And if something happens to that bank, a bankruptcy judge might look at these assets in the gold fund and might say that these assets are going to be distributed to all creditors of the bank, not just the people who bought that. Because again, you have an IOU. So I think it's very important for people to really look deeper into it and make sure that whatever gold or silver they have are specific bars assigned to them. That they have an invoice or some other document which shows that they're the physical owners of it. Because when a crisis comes, that's going to make all the difference. So I think that's the main message, that I was trying to convey yesterday.
Excellent. Yeah, some very good advice there. Okay, as we begin to wrap up the show, is there anything else you'd wish to share with us today?
Stay tuned about Gregersen. I think if this works out, it's going to be something that can be very useful for people. And in a way, coming back to this point, do you own the bullion, do you not own it? Oftentimes people just get a statement which says you have so many ounces here and so many ounces there, but you never get to see the bullion. Well, why not ask for more details? Why not ask to have that bullion Gregersen? Because if the entity you're storing it with is saying that it's being stored at Prinks in Zurich, right? Then why not contact your dealer and say, well, I want that bullion in Prinks of Zurich actually be photographed or Gregersen, which has photographs and other information and so on, and get the details of that. Then you know it's there, because oftentimes it isn't. So I think people really need to start demanding for more details about this thing and do it before we end up having a crisis, not after.
Great. Okay, well, thank you for your time today at the conference, Gregor. It's been a pleasure.
Thank you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?